Guys, house prices have fallen for the first time this year by over 1%. There is a cost of living crisis in parallel to that. People can't afford to warm their houses. They can't afford their utilities. We can't afford food. The cost of food is going up. It looks like there's a recession on the way. The Bank of England have raised base rates once again. What is happening to the property market? It looks like we're in for a crash according to the articles out there. People are predicting that London house prices are going to fall by 10% by 2024. Tens of thousands of pounds wiped off of people's properties. It's looking dark, guys. Let's get into this month's September 2022 housing market UK update. Welcome back to the channel, guys. My name is Warren. I am a banker here in London and property investor across the UK. My goal is to live free and independently, to be independently wealthy from property. So I'm looking for an income of £3,000 per month from property in the next 5 years. If that's what you're about to, subscribe, like, that's what my content is all about. So let's get into this housing market update for September 2022. You saw from my intro, guys, that it is looking gloomy. If you look at the news, if you read the news, people are predicting the worst for the UK housing market. If you watch my update last month, I said that this is just a correction that's going on. Last month we saw the rate of growth slowing down in the UK property market after pretty much 2 years of consistent growth in house prices across the UK. For the first time this year, we've seen a decline of 1.3%. As you can see on the screen from the Rightmove stats, from January to July, we've seen a lot of growth. And for the first time this year, we've seen an actual drop in the prices, in the average prices of houses in the UK. And then when we have a look at how Rightmove are actually explaining this and their commentary on this, they say that UK house prices usually drop in August. We will take a look at that further on in this video. And this 1.3% drop is on par with the average drop over the last 10 years. They talk about summer holidays taking priority and new sellers dropping their prices as we move towards Christmas, because a lot of people psychologically and mentally, when they're selling a home, you don't want to carry over the burden of trying to sell it into a new year. So I get that people want to sell before Christmas. Also talks about demand, so saying that demand continues to soften and supply is improving. We did talk about that last month as well. So guys, how bad really is the state of the UK housing market right now in September 2022? I showed you a bunch of articles in the intro that really predicted the worst. You would think that houses are about to go down to the price of a packet of crisps. And in this article by Property Eye, the headline is "House Prices Fall Sharply, Survey Shows," okay? And then it makes some commentary on the Rightmove data that we're analyzing in this video, and it reiterates some of what we just saw just now when it talks about the August drop being in line with seasonal expectations. Again, we'll address that in a bit, but interestingly, the rest of the article isn't really in line with the headline. I think they've put the headline in there, guys, to get attention, but when you read it, it talks about interest rates going up, which we have seen again from the Bank of England. But even though interest rates have caused deposits to be 20% higher than at the start of the year, despite this, demand for properties is actually 32% higher than this time in 2019. And we look at more of the language, it says that even though demand is higher, it's cooling down. Demand has eased to a degree, and the impact of interest rates will gradually filter through during the rest of the year. But the data shows that they are not having a significant impact on the number of people wanting to move. And it rounds off by saying that the imbalance will prevent major price falls this year. So guys, what we're seeing in the media, as usual, when it comes to the housing market, is alarmism, sensationalist headlines to draw you in and to get your emotions. Guys, I do not read property news, if I'm dead honest with you. I just study the data. What are prices doing? And you need to try and apply some perspective, wider perspective, to what you see happening in the short-term housing market. And when I talk about putting things into perspective, if we take a look at the growth of UK house prices over the last 12 months, according to the Land Registry. This is the official record of house sales in the UK. There's a slight lag, so they currently have data up to May. And bear in mind, they're recording all of the house sales for the whole of the UK. So it takes more of a time for them to get up to date with the latest month. But for the last 12 months, the house price growth is just under 13%. And yes, as they update towards September, there will be a slight decrease, but I don't see the number dipping below 10%, guys. So what am I trying to say to you? Yes, there has been a dip in August for UK house prices, but in the wider context for the year, we're talking about a growth rate still, despite that dip, of 10%, between 10 and 12%. Dips happen, guys. Dips happen in the housing market all the time. Does that mean that we're in for a recession, a property market crash? Absolutely not. Like I said last video, guys, I believe it's a correction. I don't believe that we're about to see a property market crash. And some of you guys in the comments on these monthly update videos, you're telling me, no, we're still going to see a crash. I agree with you that there has to be a correction. I absolutely agree with you there, but I don't believe there's going to be a crash, and we'll see at the end of this year. So one of the things that I quickly want to challenge in this Rightmove release is that they say there are traditionally dips in August. I've taken a look at the land registry data over the last 5 years. I've just taken the last 5 years, and let's see what happens from July to August in the last 5 years. So July 2016 to August 2016, no dip there. In fact, there's an increase. Let's fast forward to 2017, July 2017 to August. No dip there, there's an increase. 2018, increase. 2019, increase. 2020, decrease. 2020, slight decrease, just kidding, there's an increase. And lastly, if we go to 2021, once again, an increase. So I'm not sure what they're talking about there. Maybe it's just their sample size. They don't necessarily have price pay data for the whole of the UK. Maybe this is just the sales that are going through them as a company, which still is a large portion. Rightmove is very, very, very popular. But if we're talking about the whole of the UK, not correct, guys. Let's also take a quick look at mortgage approvals. This is a good indication of how many people are trying to buy houses. As I said before, there is a cool off going on. If we go back to July 2021, we saw a decrease of 76,000 down to 70,000 by the end of the year. So that's not a massive decrease. It's what, just under 10%. Then you saw a slight increase in the amount of UK housing mortgage approvals from 70,000 to 73,000. And then it's dipped by just under 15% from January to now. To 63,000. So what are we seeing here, guys? We're seeing a cooling off. If we go back over a longer period, say 5 years. So let's go back to pre-C word, the global health crisis. The number pretty much hovered at round about, between 60 and 70,000 mortgage approvals per month. That's pretty consistent from basically pre-C word all the way back into 2017. Then of course you saw a dip during the height of the global health crisis, and then you see this huge spike, and that coincides with the stamp duty holiday, the 95% mortgage guarantee scheme that was introduced, and also the search for space. Loads of people were trying to move to more rural, less urban areas. So a lot of people moved during this time, and what we're seeing is just a return to those previous long-term average levels. So again, guys, it's not a crash, because if it were a crash, we'd see a dip below 60 towards the 40 and 20,000 per month mark. Again, being consistent with what I said in my last video, we're seeing a cooling off from previous artificial highs. You can't sustain activity like that in the UK housing market long term. It's artificial. It's driven by external factors that can't last forever. So we're just going back to normal, essentially, guys. Then lastly, guys, let's talk about what's been happening with interest rates. There's just been another increase, and its effect on the UK housing market in 2022, because there's been a lot of movement over the last year. So this time last year, interest rates were at 0.1%. And in the space of 12 months, we've gone up by 1.74%. So there was an increase in December to 0.25. That's December 2021. An increase in February 2022 to 0.5%, and then in March, May, June, and now August, successive increases. So we're now at 1.75% base rate. And in parallel to that, in the UK housing mortgage market, we've seen interest rates go up. And that's evident from the data from Rightmove, where they talk about the average monthly amount spent on a first-time buyer home. This shows in yellow average rental payments, and in green you have average mortgage payments per month. And as we just said, this year, really from February onwards, that's when base rates and mortgage interest rates in the UK housing market have really been hiked up. And you see a corresponding crossover between the green and yellow line. The green line is basically running towards the top of the screen, and the yellow line is still rising but less rapidly. Mortgages are simply more expensive, and I can give you my first-hand experience in the UK housing market. The other week I was just up north looking at some properties. I'm back looking for properties, so check out my vlog on that. I take you around a live viewing, everything that I saw, my thoughts, and what I ended up doing. But essentially, part of that process, when you're looking at viewings, you're obviously going to speak to brokers and you're going to start exploring how much you can borrow. I literally spoke to my broker and they said, hey, look, the sooner you come back to us, the better. Because if you come back to us 2 weeks from now, and this was before the latest increase that just happened in the base rate, they said, when you come back to us, if it's 2 weeks from now, the rates are going to go up. So what we offer you today will not be the same rate that you get offered 2 weeks from now. And that's going to have an effect, guys, on house prices in the UK housing market, especially from now, September 2022 onwards, because essentially owning a property is going to become more expensive. Rates go up. As a landlord, you're going to be paying more towards your mortgage. So that has a knock-on impact on the amount that you're willing to pay for an asset. When interest rates are low, people, generally speaking, the way that the UK housing market works, when interest rates are low, prices go up because it's cheaper to borrow and buy a property. So that's what we're seeing, guys. So in parallel with that, guys, I fully expect the UK housing market to carry on cooling down. Not only do we need to come down from excessively high heights, but also the effect of the economy, interest rates are gonna cause people to start bidding down on properties. It's going to cool down the market overall. That is my assessment. I'm still sticking with my prediction that we're in for a cool down, not a crash. Let me know what you guys think in the comments below after seeing this. Like, subscribe, follow me over at TikTok and Instagram, and I'll see you guys soon.